We have gone from the G7 to the G20, which means that Brazil and Russia and India and China are now included.
Right.
The Chinese now hold a more American debt than any other country on the face of the earth. Are they still, at this time, aggressive about about American debt?
I think you see now, you're right, that a large fraction of American debt held by the public is held outside the United States by investors around the world, including in China, but also around the world. And I think if you look at what's happening today, you see very substantial interest still around the world in holding treasuries. And that's because our markets are still the most liquid markets in the world, and frankly, there's a lot of confidence still in our capacity to manage this and get through it. And everything we do in moving aggressively to fix this crisis is guided by that basic obligation we have, not just to American investors, but around the world, to do what's necessary to try to get this economy back on track, to strengthen our fundamentals, and put us on a path to fiscal sustainability in the future. So very important in the President's budget, you saw him not just lay out this very ambitious set of investments in improving education outcomes, in addressing rising healthcare costs, and in improving infrastructure and putting us on a path to a more energy efficient green economy. But you saw us do that in a framework that will bring our fiscal deficits back to the point where they are sustainable over the medium term. And people need to see that basic commitment, that basic anchor to responsibility. And this budget was the most candid, honest, and clear set of commitments to sustainability you've seen in a very long time. And that's very important to, again, laying a foundation for continued confidence in the American economy.
On the other hand, you get arguments that go like this. This economic crisis is so huge and so threatening that the focus just ought to be on the short term. It ought to be getting credit flowing, getting people back to work, and we can worry about long-term issues of education, health care, and the environment at a later time. Right now, let's not muddy the message, and let's focus on taking care of the near-term needs of an economy.
As you know, the President doesn't share that view, and I think he's right. I think you have to do both.
You've heard the criticism before.
I do, but I don't think it's right. I think that, again, you know, there are large parts of our country, large parts of policy, where we have not done a good job of what governments have to do to make economies perform well and for the gains of economic performance to be broadly shared. And you see the consequence of that in our education system. You could see it in our healthcare system, and you can see it in our infrastructure, and you could see it in the energy area. And the costs of inaction in those areas are very damaging. And it's very important, as part of recovery, that we start the process of remedying those failures of policy. And that will...
it does not detract from creating jobs right now. It does not detract from...
No, and I think that, again, the really important thing to do is to make sure that people see us laying the foundation for a more productive economy, an economy that's going to go faster in the future. And these are necessary things to do it. Now, there is I think this is the best way to frame it. It's economically sensible, because it's going to make us more productive, more competitive. It's fiscally responsible, because we'll have a better capacity to live within our means in the future and finance it to make sure that we're improving our capacity to grow in the future. And there's a basic moral obligation in many of these areas, again, to provide better education opportunities and outcomes to all Americans so they can participate in this economy fully, and to make our healthcare system deliver better results at lower costs to businesses and Americans who are suffering from the burden of this healthcare system.
There's also this criticism, and it's at two levels. One is that the message has been muddled. Do you accept that criticism at all, that somehow part of the problem has been not a clear message coming out of Washington?
I don't think so, Charlie. I think that, you know, again, you have to realize where we started. And we started from a deepening recession here and globally, and a huge and growing fiscal hole. And to address that crisis, which we inherited, requires the government to act with substantial resources quickly. Now, to make it work, you've got to make sure those resources are going to be effective in getting people back to work and stimulating private investment, and you want them targeted in areas which, again, which are going to make America stronger in the longer term. And what we've tried to do at the same time is make sure people understand that when recovery is firmly established, we're going to get back to living within our means as a country. Now, to do the alternative path, which is to say we're going to hope this crisis burns itself out, would leave us with deeper deficits longer term and much weaker growth. To just do the stimulus and recovery without telling people how we're going to get back to sustainability would leave people much less confident that we have the will to fix this longer term.
I have read where you've said that we need to get back to an economy in which people live within their means.
Yeah.
Tell me what you mean by that.
Well, you know, this crisis is caused by lots of things. It was caused by a bunch of very irresponsible judgments by the financial system. But it's also
by individuals.
True. By individuals,
Not
too.
a system, but an individual.
By individuals running these institutions.
Right.
But if you look at the amount the American people were borrowing relative to income, you just had a huge unsustainable rise in the basic debt obligations of the American people.
That's what the president said, in fact, I think at the inaugural, that the whole range of people bear responsibility for this. Right. Most of all the people in the financial sector, but others somehow had a contributing effect.
You know, people borrowed and spent beyond their means. Governments borrowed and spent beyond their means. And, you know, we're now dealing with the consequences of that.
And corporations were over-leveraged in terms of the business practices that they began to employ.
Mostly banks were over-leveraged, but some corporations were too.
All right. There is also this. People look at the budget that has been proposed, and they say this is a giant redistribution, a redistributionist budget. They look at the fact that, and especially some conservatives who are non-Keynesian, look at this and say, you know, this is a direction this country has never gone in. What do you say to those people who are critical of the budget because of the taxing policies that are built into it?
Yeah, well, let's look at the concrete facts in the budget. What the budget does is propose, again, once recovery is established, to restore the tax rates on the most affluent Americans to the level that was prevailing in 2001. Now, most Americans will see no rise in their taxes, and many Americans, working Americans, will see a significant reduction in their tax burdens. That moves us to a fairer, more balanced system. But it's a modest change, completely consistent with having an economy that's going to grow in the future with the gains more broadly shared. Again, you were talking about restoring the tax rates on the most affluent Americans to a level that prevailed in 2001. And if you look at the decade of economic performance in the United States, in the decade before that, you saw a period where private investment was growing very rapidly. Productivity gains were outstripping what you saw in any other country around the world. And again, you saw broad-based, much more broad-based sharing of those gains across the economy as a whole. So this is not just a fiscally responsible package, but it provides more fairness and balance to our tax code in a way that I think that is in the long-term interest of the American people.
And what do you say about taxation on capital?
But again, even there, again, what the President budget proposes is when recovery is firmly established, that we're going to restore those rates to a level that prevailed at a time of great economic performance for our country.
Those rates were?
They were... you know, it's a modest increase in those rates. And again,
exactly.
But the really important thing, again, Charlie, is that look at how well the economy fared when those rates were in place. Because, again, the decade of the 90s was a remarkably productive decade for the American business and for the American worker. And, you know, we have got to put this economy back on the path where we're making investments we need to be stronger in a way that's going to be fiscally responsible. And we're going to do things not everybody's going to like. But this is a carefully designed, responsible package of changes, and it'll leave the economy stronger.
As you know, questions have often been raised about the assumptions you made in putting together this budget.
Very, very important question. You know, we have a very careful, independent process that the Council of Economic Advisors runs with complete independence to make their best view about the likely path of the economy going forward. And if you look at that forecast, not just over the next 3 years, but over the next 5 or 10 years, it's within the range of estimates, not just of CBO, the Congressional Budget Office, after measuring the impact of stimulus, but it's within the range of estimates of private forecasts. Now, there's some forecasters who think the economy's not going to recover quite as quickly, or recovery be somewhat delayed, but it's within those estimates, and it's a realistic forecast. And, you know, we have a careful process where sometime in July, I believe.
You're comfortable with the assumptions you made?
Well, you know, they were made at that time, best judgment of those people at that time. And again, I think they're a realistic forecast. The really important things for the long-term fiscal position is the assumptions that you make for growth and inflation and interest rates over the longer term. And those assumptions, which are the most important ones for the long-term fiscal outlook, again, are absolutely right within that tight average of private consensus forecast.